Welcome back to our channel, traders. As we navigate another intense week in the world of finance, today we're diving into the recent performance of the market giants, an outlook on the week ahead with pivotal global events, and of course, the buzzing realm of Bitcoin, and more. Alright folks, here's a quick update on the dollar for you all. The US has bounced back impressively, shrugging off any ideas of a setback. Why? Well, the US continues to outshine other developed economies, especially when it comes to economic growth. Take Europe for instance. While their PMI business indicators struggled, the US breezed past expectations. And a fun fact for Thursday, the US saw an annualized growth rate of 4.9% in its preliminary GDP estimates for the third quarter. The last time we saw such growth, think back to 2014. Interestingly, back then there were whispers of a looming recession. Speaking of which, the big recession many predicted last year, still not here. The reason? High consumer and government spending. But the real question is, how long until the spending spree slows down? Stay with us as we delve deeper. Let's talk gold for a moment. Interestingly, gold seems to be dancing to the dollar's tune lately, rather than leading the way as it often does. While we did see a dip earlier last week, buyers jumped right back in, pushing gold's price per ounce closer to the levels seen the previous week. Impressive highs above 1,990. But here's the catch. History tells us that this kind of partnership between gold and the dollar doesn't last long. For all you traders out there, stay alert and gauge who will come out on top. And a quick note, even with gold shining bright, US debt yields seem to be the more appealing choice for the medium term. Keep that in mind. Since this year started, you might have heard the buzzword Magnificent Seven making rounds. We're talking about those 7 big tech giants that have been leading the market charge, no matter what monetary policy challenges come their way. But last week, they pulled the market down. We've got some disappointing reports from the big players: Alphabet, Google's parent company, and Meta, the force behind Facebook. This push dragged the stocks down. Now, S&P 500 has dipped below its 200-day average and looks like it's aiming for the lows we saw back in October. With this, the market's getting a bit shaky, with indexes searching for some solid ground. And here's a heads up. If the Fed doesn't step in and play the hero, we might see the S&P 500 dropping to 4,000 before we toast to the new year. Quick math, that's about a 5% dip from where we're standing now. Let's dive into the world of oil, specifically WTI. Now, while oil prices might have been on the decline last week, it's crucial to note that on every little dip, there's support to keep things moving steadily upward. Kinda surprising, right? Especially with all the buzz around the Middle East. But here's the thing, supply isn't slowing down. In fact, the US is pumping and exporting more oil than ever before. On the demand side, Americans are consuming more fuel, and over in China, there's a surge in domestic demand, which only pushes energy needs higher. However, we've got to watch out for shaky markets and the strengthening dollar. These are potentially the biggest short-term challenges for oil. So let's talk Bitcoin. From the 15th to the 24th of October, this crypto giant soared, gaining over 30% and touching highs above 35,000. Now, this wasn't just a small bump. It felt like Bitcoin was waking up from a nap and stretching its muscles. From a technical perspective, all signs are pointing north. We're seeing some confident buying going on, especially with Bitcoin cruising past its 200-day and 200-week moving averages. Plus, it's been hitting its highest numbers since May. But let's pause for a second. What's fueling this rally? Are folks looking at Bitcoin and thinking it's the safety net with all the shuffles happening in the stock market? History gives us a bit of a heads up here. Bitcoin might seem like a safe bet until things get real dicey. If we see a global assets meltdown, just remember, Bitcoin might not be a safe corner. Think back to the early 2020s as a little reminder. Stay savvy and keep watching those crypto waves. The spotlight this week is on the US. We're all waiting for Wednesday evening when we'll hear about the key interest rate decision and what the officials have to say. Now, the buzz around the market is that we shouldn't expect a rate hike. It's pretty much a given. And honestly, with the strong US GDP data we've seen, Powell won't easily brush off the thought that we've reached the peak with rates. So the big question, how will the Fed set the scene for what's coming? Right now, there's a 20% bet in the market on a rate hike in December. If those odds odds dip, it might shake up the dollar but give a little boost to stocks and commodities. But if those odds rise, well, expect some fireworks in the market. And there's more on the calendar. Keep an eye out for what the Bank of Japan has to say on Tuesday, and then the Bank of England's turn on Thursday. Their words have some weight to tilt the scales. Oh, and let's not forget the big wild card, Friday's monthly job report. Remember how it shook things up last month? Expect some drama this round too. And for those keeping tabs on company performances, we've got some heavy hitters sharing their scorecards. Watch out for updates from Apple, PayPal, Ferrari, and a few others. Stay locked in. Join us again next week for another Pro News Recap.